Have you had someone say, no, I'm not interested in Karatbars because I can buy my gold down the road at my bullion dealer much cheaper than that? I've had someone say that to me recently, and of course the first thing I did was jump onto my calculator and multiplied it out. There's 31.1 grams in 1 ounce Troy, and I converted it to US dollars, and it came up to around about $2,000 an ounce. So I thought, oh, hang on a minute, this is a bit strange. Harold Zeiss, the owner of Karatbars, is not going to price himself way out of the market. And so I thought, no, there must be something wrong here. My calculator said $2,000 an ounce, and I knew that the price of gold at the time was roughly $1,300 an ounce. So I'm thinking, well, maybe this person that I was speaking with was right, that he can buy his gold cheaper down the road. So that's what we're going to look at in this video. Now, look, one other point that I'd like to bring up with you is that when Wendy and I first joined Karatbars, we didn't bother about the pricing. For two reasons, two valid reasons in my mind. The first one is that we knew that Karatbars and Harold Zeiss wanted to become a household name, which means they're going to be around for years, decades, and decades to come. So to do that, you cannot price yourself out of the market with your product. Now here's the market. There's the range, the high, low, and that's the competition in there. You're going to have to price yourself somewhere in here. If you price yourself up here, it means that you've got a unique product or exclusive product that is much higher value. You can get away with it. Under here, you've got an inferior product, or you want to just get rid of your product because your product's not being sold. So we knew that Harold would be somewhere in the middle with his pricing. So we thought, all right, that's fine. It's called capitalism, by the way. It's a free market. The second reason why that we didn't sort of jump into, well, what's the price of Karatbars, etc., is to do with the business model. The Karatbars has, as you already know, an affiliate program with a network. Now, what that does, it means that you've got tens of thousands, hundreds of thousands of people around the world, affiliates, and out of those people, I'm sure there would be someone looking at pricing, for example, or authenticity or purity of the gold, or whatever objection may come up. And with a large network like that, what generally comes up is not necessarily a self-policing, it's more like self-monitoring. And I knew that if there's something was out of the ordinary with Karatbars, I would have already heard about it straight away. So that's the two reasons why we didn't jump into spending time about looking at the price until someone said to me, I can buy my gold cheaper down the road. Okay. So now the other thing we want to do is, before we get into the presentation, is let's have a closer look at the Karatbars card itself. Now, I know you already had a good look at this, but let's just go back to it and bring up four points about just a classic Karatbars card. The first one is the gold is actually minted. It's not cast. Cast gold is where you see they pour it from the molten gold into a mold, tip it out, and it comes out looking almost like a loaf of bread. You know that texture, that rough texture like a loaf of bread? That's called cast, and it's the cheapest way of doing it, and that's how big bars are normally cast. This is minted, similar to coins and the like. Very fine surface. The manufacturing process is a lot more involved, obviously, in minting than casting. Okay, so the first thing is it's minted. The second thing is the package itself is quite robust. It's actually a rather unique package, and I'll go more into packages shortly. But this particular one, it's built like a credit card. It can slip into your wallet, and it protects the bar, the 1 gram bar, and it ensures that it's secure, it's authentic, but it allows you to trade it. It allows you, it becomes almost like money. You can carry it in your wallet, and it's what's called fungible. But being in that package, it's what's called fungible. Fungible means the card in your pocket is the same value as the card in my pocket. Okay, so that makes it fungible. So, and it's all really to do with the package that it's in. The third thing is the hologram on the back. Now, there is a term called Kinnabar, which was now, I think it's registered with UBS, the Union Bank of Switzerland, but there's the idea of having a hologram for authenticity. This is a Karatbars hologram, is rather unique. I'm pretty sure there's only about two products in the market with a hologram, and Karatbars is one of them, and that's a big plus for authenticity, the fact that it's got a hologram. And the fourth thing is, of course, is the certification on the side where it says LBMA Gold, which we'll talk about LBMA Gold in a little while. So the certification comes in the package. So just bear that in mind when we go through the fact that, one, it's minted, which is a more costly process. Two, it's got a hologram on the back. Well, actually, that was number three. Number two was the fact that it's in a robust package, one that can be used in a trading situation. And the last one is the fact that it's got a certification with LBMA on the bottom here. All right, so let's get straight into this presentation now, where we're going to go through a bit about gold pricing, about LBMA certification, and then go and look at a real live comparison. Okay, so what we're going to do to make sure that everybody's on the same page, we're just going to look at some basics of gold. And the first one we're going to look at is what is actually 24 carat. So this is interesting. We'll just go over to how stuff works, for example. And we have a look here at the top line. It says a carat is a unit of weight for diamonds and gemstones. 1 carat equals 200 milligrams. So if you've got a 1 carat diamond ring on your finger, you've got a 200 milligram of diamond. Now, just below it, it says a carat with a K is used for gold, unit of purity. 24 carat gold is pure gold, right? So there's a mix for jewelry. So it says if a piece of jewelry is made with a metal, which is 18 parts gold and let's say 6 parts copper, you've got an 18 carat gold ring on your finger. So that's where the carat comes from, and that's what it means. Oh, sorry, where it comes from is it's actually very old, as a matter of fact. This is quite interesting. Turns out we've got a Deutschmark. See, this is the Deutschmark, goes back 1,000 years, and it weighed 24 carats or 4.8 grams. The purity of the gold in the coin was expressed as the number of carats, was a 24 carat. So it actually came out of a Deutschmark 1,000 years ago. So that's where carat comes from. So when someone says, okay, I've got 24 carat, it's to do with the purity and it's to do with the ratio. So 24 is basically, they're calling it 100%. It's not really 100%. I'll show you why in a minute. But basically it's the 24 carat. You have 18 carat gold for rings, 9 carat, etc. So the next one is the 999 fineness. Now some people write 999.9%, and there's no such thing. It's 999.9 out of 1,000. Well, let me just show you here. Let's go back now to, so let's have a look at Wikipedia regarding the fineness scale to find out what 999 really is. Millesimal fineness is a system of donating the purity of platinum, gold, and silver alloys by part per thousand. So there you go. So it's parts per thousand. And if we have a look at, let's go down a little bit down here, you can see that 999 is regarded as 24 carat. So, which is 999 really is 99.9% as regarded as 24 carat. But our Karatbars is 999.9. So it's even better than the normal 24 carat. So that's what I was saying before. 24 carat really isn't pure gold. It's regarded as 99.9% or 999 on the fineness scale. So you can see further down here, we've got here's 18 carats regarded as 750 and 9 carats, which are the common ones, of 375. Okay, so that's the fineness scale. So we've got a carat scale, a fineness scale, and of course our Karatbars gold is always written as 999.924 carat. LBMA good delivery specification. Okay, so let's have a look at that now. Over to here, and we're in Wikipedia again. The good delivery specification is a set of rules issued by the London Bullion Market Association, LBMA, describing the physical characteristics of gold and silver bars used in the settlement of wholesale London bullion market. It put forward the requirements, and just a bit down here is interesting. The document, right, which is the entire good delivery specification, the document includes specification requirements regarding fineness, weight, dimensions, appearance, marks, and production of gold and silver bars. It specifies the procedures for weighing, packaging, and delivery. It also describes policies ensuring the refiner's compliance with these specifications. So these specifications are quite rigorous, and not every refinery has an approval from the LBMA good delivery list. So just bear that in mind. Of course, Karatbars only sources its gold from LBMA approved refineries. So let's go back. So that's the LBMA. That's one thing I meant to mention to you. One of the specifications regarding the LBMA and the good delivery list is regarding tolerance on weight. Now, for example, your motor car has a tolerance. So if you've got a bolt, for example, that may be 50 millimeters long, it has a tolerance of plus and minus a certain percent. Let's say plus or minus 1%. Okay, so it can be shorter or it can be longer. But one of the specifications with the LBMA good delivery list is regarding weights. It has zero negative tolerance, which they've got a positive tolerance, but not a negative tolerance. So in other words, when you buy a kilogram of gold from an LBMA certified refinery, it will never be less than 1 kilogram. Or if you're buying a 1 gram Karatbars bar, for example, card, you will always have a minimum of 1 gram in that bar. Now, our sponsor, Rosemary Reed, had the opportunity to go to a manufacturing jeweler and take the card along, and they extracted the little gold bar out of it. They confirmed that it was 24 carat because the instruments they had, all it could confirm was whether it was 24 carat or better. But the weight turned out to be 1.1 grams. So it was 10%, it weighed 10% more than what was written on it as a 1 gram. So just bear that in mind. That's rather good. The fact there's zero tolerance on the negative side regarding weights for any precious metals coming out of LBMA refineries. The next one is cast bars versus minted bars. Look, I've already touched upon this. The cast bar is the cheapest form of manufacture. You just pour it in a cast, a mold, tip it out when it's done, and it's out a loaf of bread out of the oven. So that's the cheapest form of manufacture. They stamp it, of course, but the minted manufacturing requires a lot more work. It's a lot more costly. It's rolled and folded and stamped and engraved in some occasions. So there's a lot of work, and that's how come you actually see this very shiny surface. For example, in that pic on the left-hand side, they're not cast bars, they're actually minted bars, even though they are 1 kilogram bars. You can tell by the shine on them. Cast bars are rather rough and marked. So just bear in mind, cast bars are a bit cheaper. To a minted bar, it's dearer. And of course, coins are minted as well. Quantity, volume purchases, already touched upon that. The greater the size of gold that you buy from a bullion dealer, the cheaper it is, as you would buy anything. Bananas, for example. If you buy the caseload, you're going to get them a lot cheaper than buying bananas in the 2s or 3s, etc. So with gold, if you buy a kilogram or an ounce, obviously you're going to get a better price break than you would when you buy 1 gram. We accumulate rather than invest. Okay, now you've heard this before, and it really looks like this. So you can either invest on the left-hand side. If you've got a spare $40,000, you can go and buy yourself a kilogram bar, and you would normally invest it. You would get them to store it, or as I say, go and put it under your bed and you wait for the price to rise. So when the price gets up to something that you're comfortable with, you would sell it, wait for the price to pull back again, and then you would buy it again and wait for the price to rise again. That's how you invest in precious metals. On the other hand, on the left-hand side, instead of $40,000 in one purchase, you're actually doing $65 because it's only 1 gram of gold, and basically it's regarded as pocket change. And if you'd like to do that once a month or once a fortnight or once a week or once a day, it's up to you. But it's in small quantities, which we call affordable, where the larger 1 gram and 1 kilogram, etc., or 400 ounces is another big one as well. It's often out of the reach of a lot of people. So we don't invest, we accumulate. Is Karatbars more expensive? It's a superior product, and you would expect it to have a superior price. Now we've talked about, yes, it's minted and not cast, and therefore that's a dearer manufacturing costs, and it's pure gold because you can buy gold of a lesser quality, and even though it may be 24 karat, it could be 999 in its finest, for example. So you've got to actually say what sort of gold you're actually buying. And 999.9 24 karat gold is the gold to buy. Yes, it comes from an LBA certified refinery, which we just had a look at. But let me just go and see about the refineries. Let's see, I've got them tucked away here somewhere. Okay, I'm just having a look now. I'm in the Karatbars main website, and here's the 2 refineries. Currently have 2 refineries. That one there, right, Atasay, is Atakulce, is the brand name. That's the one in Turkey. And then we've got Degussa, is the company that Karatbars buys its gold through. Degussa has access to LBMA refineries within Germany. So you can actually go and search those on the internet and go and find out what they're all about. So that's the 2, Atasay and Degussa. Look, my card that I've got here right now, it's got stamped on it, Degussa. But yours may have, if you want to look over on the right, it may have this Atakulce over on the right there. It's a different emblem. Okay, so it comes from an LBA certified refinery. Superior tamper-proof packaging. Now, I've already touched upon this in the beginning, and this is very, very important. And you get so used to seeing a Karat bar, you think, all small gram bars come this way. No, they don't. Look, the majority of bullion suppliers on these small gram arrangements will give it to you in what I call a blister pack. A blister pack is what you go and buy your nuts and bolts out of your hardware store. So you can't exactly put them in your pocket, put them in your wallet. Not a normal blister pack. Even though they call it tamper-proof or tamper-evident packaging, it's really it's really a glorified blister pack. This is tradable gold simply because it's in a package where, yes, the gold is fully protected. It is tamper-proof, but it actually fits in your pocket and fits in your wallet, and it's robust, as is a credit card. So the packaging is entirely different. Look, there's even some bullion companies that will give you almost a certificate. So the whole thing's about this big. You can actually mount it on your wall. And so on one side, here's a little tiny gold bar over here, and way over here is this humongous certification arrangement here. It's about that big. It's almost like an A4 page, and you would actually mount it on the wall. So obviously that sort of arrangement you wouldn't be able to use for normal trading goods and services. So that's one of the things that makes Karatbars unique and special. The hologram, we've talked about the hologram on the back. There's only a couple of companies that will do that, and Karatbars is one of them. So that in itself just adds to the authenticity. And this is this idea of being fungible, where you can actually exchange the same item between people, or as I said in the beginning, when you have a Karat bar in your pocket, the Karat bar in my pocket, it's exactly the same value. It's fungible, and these are security features that are added to the Karat bars. Now, these security features are unique, and they've only been around just a few years. So just bear that in mind. That short list that you've got there, that it's basically it's minted and not cast. It's pure 999.9 24 karat gold. It comes from an LBMA refinery, and it's got a superior packaging with the hologram on it. Just makes it a package that no one else has got this, which is really good. Okay, now this may be a bit of a boring boring bit. Well, I need to put it in. I mean, I'll quickly gloss over it for you, but just bear with me just for a minute. Like, where does the price of gold come from? Some people are interested in this, and some people are not. But I thought I'd put this in. Look, there's two prices, believe it or not. One is the fixed price, and it's issued twice daily in London by the LBMA. Why London, by the way, is about 3/4 of all the gold in the world is actually moved through London. So hence the London Bullion Market Association. Basically, it's historical to do that. Now, the Trade Association has over 100 of the world's largest banks, financial institutions, and precious metals, and some of these are market makers. So that's the fixed price, which comes out twice daily. Now, from the fixed price, we have a thing that's called the spot price. So the spot price is most widely used price for gold. Okay, it's the price of gold at the present moment and is used as a base for determining the prices in your local gold shop. Right, the spot price of gold is based on the price of the futures contracts and traded on the futures exchanges. So just bear that in mind. The spot price is based on the futures contract, and it's what I call a fictitious price. Oh, by the way, on the right-hand side, that thing's about the size of a loaf of bread. It's all, the texture's rather rough. It's a cast bar. It happens to be 12.5 kilograms, 400 ounce troy, and therefore it's around about $500,000. So that guy on the right is holding $500,000 in his hand. It's phenomenal, isn't it? Okay, so there's one thing I just wanted to bring up with you is an analogy. So you can see that the spot price of gold is, well, it's based on a futures product and on the futures price, and it's fictitious. So around the world, all the gold manufacturers, suppliers, bullion dealers, etc., will base their price on this spot price plus a margin, because they're in business, obviously, to make a profit. And the margin is determined by several things. An obvious one, for example, is the quantity you buy. If you're going to buy in kilograms, you're going to buy at a better price than you would necessarily at ounces, at 1 ounce, or even just at a gram. So the greater the quantity, the better the price. Also, the package, whether you buy it, for example, as a minted bar or just a cast bar, or whether it's a minted coin. So that's determined, or whether it's jewellery. So this determines this margin that goes up here. Now, look, to give you an idea, now I'm not an authority on gold, but I have been in the finance industry, and this where this analogy sort of struck me, this parallel idea. In the finance industry, all the central banks in the world set what's called their cash rate. In Australia, it's set on the first Tuesday of the month at 1:30 p.m. And the cash rate in Australia right now is 2.5%. It's been 2.5% for quite a while. In America, I think it's around about 0.5%. In the UK, Bank of England, I think they've set theirs for about 0.25%. The Bank of Japan, for example, has had their cash rate there for 0% for donkey's years. So this is it's a fictitious figure called the cash rate. Now, can you buy money at 2.5%? Let's talk about Australia. Can you buy money at 2.5%? And the answer is no, because it's a fictitious figure. The cheapest that you can buy money means get a loan. The cheapest is the interbank rate, which is around about 3.5%. You can get a home loan for round figures around about 5%. You can get a car lease for around about 8%. You can get a personal loan, unsecured personal loan, for about 12, I think 13%. Your credit cards, 18%, 20, 25% in that order. So you can see, depending on the product and the risk, and the financial risk, depends upon this margin that is put on here. And to me, it's a similar arrangement with gold. Now, one other thing regarding pricing that I should bring up is now and then you'll come across a thing called spot price minus 5%. We're going to sell a gold bar at a bullion dealer, spot price minus 2.5%, minus 5%, or whatever. And you think, well, how can they do that? How can they sell it below the spot price? Well, if you think about it, the spot price is varying all over the place. So what if the spot price, for example, now is $1,300, and they're going to sell it less 5%, or maybe even less 10%. 10% is probably too high. But let's say 5%. How do they do it? What if they bought their gold at 1150 6 months ago or a year ago and stored it and then manufactured the product into little bars or gold coins or whatever? So they could get away with that. The other way of understanding how you can get prices below a cost price, as it were, is to do with the structure of a retail outlet. And a good example of this is in the motor industry. Have you ever seen the adverts for, let's say, Mercedes-Benz, BMW, or Lexus? A big ad in the paper that says, before the end of the month, get your Lexus, and you'll have the interest, the finance at 1% or even 0%. You think, what? Well, as I said, in Australia, the leasing rate in Australia is roughly around about 8% right now. So how can a car company actually, or a car dealership, have a product whereby they got 1%? Who's paying the difference? Who's paying the 7% difference? And well, there's two areas it could come from. One, it could come from you via the sell price. They go and jack up the sell price, or whatever, or do a fiddle with that, so that extra is actually built into the sale price that you pay for. But more than likely, it may come from the manufacturer. The manufacturer could be overstocked. It could be towards the end of the financial year, the end of the fiscal year, and they want to move 1,000 cars in a month. Okay, a good way to do it is to give a rebate back to the car dealership. So that extra in the finance of the vehicle is actually paid for by the wholesaler or the manufacturer and passed on to the retailer. So it could come from there. So just bear that in mind. You will come across, we sell our products or this particular bar at spot price minus 5%. Now just bear in mind that it's only going to last for maybe a short time. How often do the car dealerships offer such a deal? Maybe once a year if you're lucky, and it may only last for 2 weeks. Where we're talking Karatbars, you can buy a Karatbar at that price, 1 gram bar at that price, any time of the year, any day of the year. It will be there for you to buy. Okay. The other thing that we've talked about, of course, is quantities as well. So you've got to be aware of that. Karatbars, you can buy one off. A lot of other dealerships, no, you've got to buy, $5,000 worth, or you've got to buy 100 bars or whatever, 1,000 bars, whatever it may be. Now, continuing on with the gold pricing, let's have a look a little bit deeper into this. You can see in this historical chart that over here on the left-hand, whoops, Daisy, when I get the right thing working, over here on the left-hand side, from the 1800s, it was $20 an ounce, and it was $20 an ounce all the way through to 1933, when President Truman adjusted the price to actually help the US economy recover after the Great Depression. So that's when it jumped up from $20 to $35 an ounce. So it stayed at $35 an ounce all the way through the 1930s, the 1940s. At the end of the war in 1944, we had the Bretton Woods Convention, and that confirmed it, that the US dollar was to be used for all commerce throughout the world, trade, and also the fact that gold was to be still $35 an ounce. So we get to 1971, and that's when President Nixon released it. And of course, away it went like a hot air balloon, and it went rocketing up over the next few years. It really didn't, the price of gold really didn't rise like a hot air balloon. It was the US dollar sank like the Titanic, and the chart is actually looks like the gold price is rising, but actually the value of the US dollar is decreasing. And of course, all the other currencies in the world are linked to the US dollar, are compared to the US dollar. Therefore, they're in the same boat as well. Well, the Titanic. Okay, so you can see that it rose up to a maximum of 1920 in 2011. And then when that chart was made, if you have a look top left, it was made in April of 2012. And over on top right, you can see that gold was 1664. Now, the current price of gold is 1260.57 as I'm making this video. So it's pulled back from the 1920 peak. It's now pulled back, and it's actually been held back. If you have a look at this, you can see that it's being held back for some time. So this is a screen capture that I did off my trading platform just 2 days ago, and sorry, yesterday by the dates. was it 2 days ago? And you can see that the price did dip down in 2001 to $250 an ounce, probably from around about 350, and then it steadily rose all the way up to the September 2011, where it peaked at 1920. Then it's come back off, and you can see that it's went down to 1180 there in June and December last year. And now, when I did the screen capture, it was 1261.82, and as I said, currently it is 1260.64. Okay, well, the chart, by the way, is not that complicated. Each one of those little bars is a month, and the green bars is when the buyer's in control, in other words, the price is going up, and the red bar is when the sellers are in control and the price is going down. And that's it in a nutshell. So that's the price of gold as it stands, and that's basically when you can do just a Google search, current price of gold, and it's called the XAU USD. XAU is the abbreviation for gold, and against the US dollar. You can just Google that, and you'll come up with the current prices. So now let's get into the real comparison with Karatbars, a real life comparison, as it were. Now, just to fill you in with this on my selection, it's very difficult to actually find a bullion company in the world that will actually provide you 1 gram of gold. Some say they will, they may even have it listed, but when it goes to actually buying it, you find no, we're out of stock, or you may have to buy a minimum, let's say 100 bars, or maybe a minimum price break of maybe $1,000 worth or $5,000 worth or something. Now, I didn't want an ordinary, just down the road a bullion dealer. I wanted a well-known company, a large company that I would know would provide me with a good price. So I chose the Perth Mint. Why the Perth Mint? Well, I happen to be in Australia. Australia happens to be it was the largest manufacturer of gold in the world. China has only just recently overtaken us. Now, in Australia, the largest supplier, the largest state, is the Western Australia, and Perth is the capital of Western Australia, and the Perth Mint has been around for, I don't know, 100 something or other years, 150 years or something, 120 years or thereabouts. So I knew the Perth Mint would actually give me a good price, because they provide the largest number of sales in Australia. Now, the Perth Mint also happens to have a refinery side of the company as well, and that refinery and that part of the company is LBMA certified. So that fulfilled my requirement there. We've got an LBA certified refinery. Yes, it does produce small bars, and yes, it should be a very good price because of the volume that's sold and moved through that company. So once I had a look, I found that yes, they did list 1 gram, 2.5 and 5 gram bars, but they don't stock 1 gram and 2.5 gram. I think they provide those on a special purchase or a special deal or some special promotion. Under normal circumstances, 5 grams is the smallest they do provide. So I thought, well, that's okay. Karatbars provides 5 grams as well. So let's go and do a direct comparison of today's date, the pricing of today's date, on the 5 grams between the two companies. So that's how I came to choose the Perth Mint. So let's go and have a look at the Perth Mint. Well, before we do, how about we go and have a look at the pricing for Karatbars itself. Now, where I am, I'm in the back office, my back office, and you can see there's the classic gold card, which is selling for that. I'm doing it in euros, by the way, because it says approximate US. I don't want to do an approximate. I want an exact. So we buy our cards in euros, so that's fine. So it's the 1 gram bar. The 2.5 gram is selling for that, Now here's the 5 gram. 5 gram is selling currently, right now, for 187.05 euros. So what I've done, come back to the PowerPoint presentation, I've taken the 187.05, and I know I've already done a check just before that the conversion between euros and Aussie dollars is 1.44 currently. All you got to do is just do a Google on this sort of thing. Conversion euros to Aussies. Now, why I've left it in Aussies is because I didn't want to do too many conversions. I didn't want to. I suppose I could have taken the Perth Mint and converted it to euros, but I thought, no, what the heck? Let's just go and take the Karatbars price in euros, convert it to Aussie dollars, and then do the direct comparison in Aussie dollars. Now, the other thing I haven't taken into account is conversion fees charged by the bank. Because really, all I'm doing is looking for a comparison. I wouldn't normally buy my Karatbars, even though I buy them in euros, but I wouldn't buy them with Aussie dollars, because how I personally buy my Karatbars is with my MasterCard debit card, which has got euros in it, that I receive my commissions. So I buy in euros anyhow. So just to do the comparison, I decided to bring it one conversion back to Aussie, and I won't take into account the conversion fees. The other thing I'm not taking into account is shipping, freight. I'm not taking possession because well, if I had to take possession out of the Perth Mint, they'd probably end up charging me shipping. It would compound this. I just want it very, very simple. Let's just apples for apples. That's what I'm doing in this case. So I've multiplied by 1.44 the euro price of the Karatbar, and it comes up to 269.35 Aussie. So let's go back, and now, so that's what I've done. There's the 187.05, and I've multiplied it by 1.44, and I've got it into the Australian dollar. Now let's go to the Perth Mint. I'm in the Perth Mint. This is where we end up buying the 5 gram bar. Now you can see the 5 gram bar looks very, very nice, as a matter of fact. It's nicely stamped with the Perth Mint's logo. It says it's 99.99% pure gold, 5 grams, and it's got kangaroos engraved on the back of it. No hologram, just kangaroos. So there's the price. And to make sure that we've got the right product, you can see here that the fineness, right, in percentages is 99.99, which is the 999.9, to get your nines confused. And you can see that the minimum gross weight, remember, minimum, we talked about that, is 5 grams. And it's in a tamper-evident display card. Notice it's a display card. It's what I call blister packs. So, but that's okay. All right, we're just buying the 5 grams. So what we're going to do is take that price there. Now I'm going back to this presentation, and there it is there. I'm subtracting the two, and we end up the difference being the Karatbars is dearer by $11.35. Now that works out to be 4.4% more expensive. Well, I'm thinking 4.4% is not much, taking into account that the Perth Mint 5 grams does not have a hologram on the back and is not in a tradable style of package, a more expensive tradable sort of package. Look, the 4.4% wouldn't even cover the cost of putting the hologram and the package together. So I'm very happy with a real life example is basically the same price. All right. So when someone says to me, I can buy my gold cheaper down the road, they're not talking, in this case, a 5 gram bar, are they? So I was quite pleased with that test. And you can do it yourself. You can go and shop around. You can go try some other ones. But there it is. It's one of the largest the bullion suppliers. It is the largest in Australia, and therefore it's one of the largest in the world. It's been around forever. It's LBMA certified. Their prices would be pretty sharp, and here it is. Karatbars comes up within cooey of, as we say in Australia, of the Perth Mint price. So close, it's almost insignificant. I mean, $11.35 difference, 4.4%. Okay, and we've got this different packaging and the hologram, which I'm sure would cost a lot more. So I'm personally pleased about that. Okay, so just finishing up from what we've just seen, there are a couple of points to remind you of. One is in the comparison. One is there's no bank fees in the conversion. Okay, so I want to keep this simple. No bank fees, there's no shipping and freight involved. And the other thing is there's no 3% discount that we use when we buy our gold. I wanted to keep this just purely simple and to see what it would come up like. And now we have. So I suggest that you go and look at this video one more time, because the information contained here will give you a greater knowledge, a greater confidence, such that when you're talking to people, when you're writing your emails or doing follow-up messages in your AWeber sales funnel, even when you're doing your own videos, it will change the way that you think, those little subtle things, and as I said, give you more confidence and more posture. That Karatbars is priced right, as I mentioned in the beginning, with Harold has placed it in the market at the right price, and we are comparing apples for apples and not apples and oranges. So the person that said to you, no, I can buy my gold cheaper elsewhere, you know he was talking about investing in bullion gold and not tradable, affordable tradable gold as Karatbars is. And if he doesn't, or he or she doesn't join you in your business, it's their loss. It's not yours, because I know that you're going to be successful with them or without them.